The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And we're going to have Rich Anderson on very shortly here for quite a while. We've got a lot of things to cover. We've had another, debacle going on in the financial markets with Knight Capital. And also the Syrian UN envoy, Kofi Annan, resigned today. And Syria is one of the countries that potentially has nuclear weapons. That could be something very interesting, why he resigned. I don't know much about this, but one of my friends who's politically correct most of the time, brought that to my attention, so I thought I'd share that with you. I don't know if there's any put options or call options on Kofi Annan, but if there were, I'd probably trade them, either side. Anyway, we will be covering a lot of the commodity things, but the main thing that we want to be looking at is the fact that, I've been talking about, buying that XAU index for the last several weeks because we've had this, last week anyway, because we had the big ABCD double bottom butterfly pattern. And then we've also, made, considerable progress there. It's jumped about 3 points. I really believe this gold's going to hold. We're really close to that 1585 level that we talked about last week. The 618 of this last move comes in at 1587. So if you're interested in gold stocks, I would certainly take an interest in that. One of the reasons, one of my good friends, Bert Doman of Wellington Capital Management, he's one of the really smart guys in this business. He does a lot of technical stuff, but he also does a lot of fundamentals. And, his segment that he's really focusing on is buying the gold mining stocks. And, we talked about, looking at Newmont because it looked like it was pretty good. It's actually moved up a little bit. I believe it's up today in a down market. So the risk here is very, very small. If it goes below last week's low, we are flat out wrong. We get out, take our, let them spank us, and we'll move on. So that's what we're trying to do. We've got some really good patterns that will probably be forming in wheat and corn down the road a couple weeks because there's probably been a pretty good top put in for a bit, and we want to see the first correction here because we might get a chance to buy a AB equals CD pattern on the downside. Okay, folks, I'm going to bring in Rich Anderson from Anderson Capital Management. He's going to be joining us now. Rich, are you on the line?
Yep. How you doing?
I'm doing fine. I'm just looking at one debacle in the market after another. I was
yeah, there's so many to choose from.
I'm beginning to think we should move our capital into postage stamps because then at least we'd be able to use it somewhere,
Well, you hit on a very good point, and I would like to point this out to all your listeners, whether they be parents or grandparents, that one of the best ways to teach your kids about money is to buy them a stamp from the year they were born, a first-class stamp, and then buy them a stamp from every year subsequent, after that, so that they can understand the value of money and how, prices change.
Yeah,
it's very dramatic. I mean, if you looked at what it cost for a first-class stamp when you were born versus today.
2 cents, buddy. 2 cents.
Yeah. I mean, what better way to teach your kids about money?
Yeah, that's pretty good. Well, I've been able to teach.
Off the track, but that's something I did with my kids.
Rich, on a personal note, I've known you 40 years, and I know both your kids. The only thing I know you taught them about money is when they asked for it, you gave it to them. So you were just like me. So don't give us this baloney on the radio show, okay? Let's get back to some business here. Anyway, listen, tell the folks about, Knight Capital, what's going on there, and, because this is certainly different than MF Global and, the thing at J.P. Morgan and also, Peregrine Financial. So why don't you give them an idea of what happened there?
Well, it's black box trading, logarithms, and the old saying is you buy low and sell high. Well, that's simple enough. But all of a sudden the computer got confused yesterday, and now this went on for over a half hour, like 3 times the normal volume on, I think it was up to 150 stocks. But to give you an idea, just as an example, one little stock, the spread between the bid and ask is 15 cents. So instead of, buying at the bid, they're buying at the ask and selling at the bid. So they're losing 15 cents every time they do a trade, right?
And they're doing
which isn't much. The only problem is the computer can do that 40 times a second, 2,400 times a minute. Mm-hmm. It adds up. That's how they lost. This was the ultimate in burning money. That's how they lost $450 million in 30 minutes.
Well, I don't think
New York Stock Exchange or the exchange wiped out decayed trades on 6 of the stocks, and the rest I think they're going to have to eat, and that's why the price of that stock has dropped like a rock. Night Capital.
Yeah. From $1,400 to under $3 a share, they probably won't make it because, once you go under $5 a share, the chances of coming out of it is pretty tough. But you can stop and think how the poor people that work for that company, well, they are certainly poor now, where they stand, they looked pretty good a couple of weeks ago in just a matter of a few days. I went through this with Drexel, back in 1990, as you remember.
Right.
And, these things happen. The main thing is, I think our listeners, and we've talked about this several times together, is to watch the safety of where your money is. Try to get one. Why don't you tell them, on the Merck side, where the difference between a clearing member and an associate member, and where the money is probably the safest place to put it, if there is such a thing as safety anymore.
Right. Well, that's frankly, I'm beginning to wonder.
Yeah.
But the difference is that who does the audits. Clearing members, the audits are directed by the CFTC to the designated body, and like most of the clearing members nowadays are audited by the CME, and the audit people will come into a clearing firm, and they'll have 5 or 6 guys there for a month, and so they're really going over the books. But apparently they didn't go over the books well enough at one of the firms.
Mm-hmm. Didn't Wassendorf actually
was allowed to to blow up, and yet one of the reports that they were required to file with the CFTC showed that they had a shortage of customer equity back in July, and it didn't blow up until October. So it wasn't like somebody didn't know about it. You can't have a negative customer equity balance when you report, and they did. But very few people look at those things, and certainly no clients. The Peregrine deal, they were introducing broker to a clearing firm, and so they're audited by a different group. They were audited by the NFA. And
they dropped the ball, I'm sure.
They dropped the ball.
They really did.
There's no two ways about it. They dropped the ball. And the problem is most of these auditors are young, really nice young people, but they don't necessarily know anything about the business.
Yeah.
So I suppose they train them to look for this, a few specific things, and so they get boxes of information, and then they're looking for these few specific things, and they really don't know the guts of how companies work and how markets trade, and so they can't see the obvious things because they've never been involved.
Yeah, I know. Can you remember 30-some years ago, Rich, when we were on the Squawk Box at Payne Weber? And, I was talking about Fibonacci numbers, and I got a call from you, and we became friends. I think it was sometime in the late 70s, I believe.
Yep.
And, I think you were only about 20. How old? I can't remember how old you are now, but I know you're quite a bit younger than me, but you were just a kid. I remember that. You hadn't even been married.
No, I'm still single, a long time ago.
Yeah, that was a long time ago.
There was tremendous amounts of information shared back in those days.
Yeah, well, we only traded about 22 commodities. There was not very much to trade compared to what we have now, and it's just amazing what's happened. Oh yeah, oh my God, we only work 6 hours a day. That's for sure.
Nowadays, I mean, your first thing I do in the morning is look at computers. Last thing I do at night is look at computers because the markets don't stop trading hardly at all.
Okay,
and to give you the difference, I don't know if your audience understands who you're competing against in some of these world markets. Let's say I'm Deutsche Bank or Citi. I've got a New York desk, and in my New York desk for gold, they handle the gold position. Then they hand it off to Tokyo, who handles it for 8 hours, who then hands it off to London. And so they've got a team watching that market 24 hours a day, and you as an individual, you got to sleep sometimes.
Yeah.
And sure, you can trust a computer, but every now and then, as we saw yesterday with Night Capital, computers can go wild, and, they would break you.
Yeah, it's really surprising that they didn't have some type of a fail-safe mechanism on this, automatic trading system, because, I've been involved with some of those, and that's the one thing that you have. Once you reach a certain point with number of trades or size of a trade, that the system automatically shuts down. I mean, that's just common sense, isn't it?
Right. In order entry, it's called the fat finger rule. That your finger stays on the zero too many times, and so everybody has their limits. But here, apparently not. I mean, it just defies imagination how it could have gotten, how the computer could have gotten it backwards. Number one, and then how they couldn't have found out, because I mean, after 5 minutes, it was obvious to tons of people that are trading in the stock market. But I suppose some of them didn't want to say anything because they were taking the other side of the trades. I mean, there's
it's a free money. It's fell out of the sky. They're picking it up.
They're
not
going to say anything. They just sucked
in
as much as they could.
Yeah, I can imagine that. Now, do you think there could have been sabotage, that somebody just wanted to take down Night Capital, and maybe a software guy that might have just been gruntled because he didn't get a raise or something, did something like that? There's always that possibility.
Oh, I think that's highly probable. I think that's highly probable. It's like back in June, I was in a city that's quite popular for vacation. And I checked into a very big-time hotel, and, we just loaded some new software, and our computers are down. Well, the trouble is, they'd been telling that for 5 days in a row. And it wasn't just at that hotel, but at their other 16 hotels in that city that so well. Obviously somebody had hacked their servers, and they were having major league problems. If I load a computer program, I might have a problem on one computer, but I'm not going to have a problem, it's 17 different locations unless somebody's,
Yeah. Hey, Rich, we got to take a break here to pay a few bills. Will you stay with us?
Sure.
Okay,
Love
great.
to.
877-927-6648, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. Our guest today is Rich Anderson of Anderson Capital Management. And, Rich, could you give us a rough idea of where do you think we stand here, you know, with the grain markets and then also the cattle markets, you know, because we're through July now, and, you know, it's not going to be long till we're in September. What's your feeling in here?
Well, corn is a July market. You know, if you don't get the rain in July, you're done. And there was a Central Illinois tour the other day, and they came up with a yield of like, 117 bushels an acre.
Oh, my
versus
God.
7-year average. This tour's been going on for 7 years. Their average has been at 179. And last year, even though they had some drought, they still got 167. So, I mean, so this is not a disaster. This is a catastrophe
Wow.
for corn. So one of the firms came out with their estimates at 124.3 bushels an acre for a national average and 36.2 in beans. But here's the difference. They're multiplying times what the USDA acreage is using. And normally when we plant our corn crop in the spring, we know that we're not going to harvest 100% of it. Normally we harvest about 92% of it. But with this year's drought, that number is going to be more like 1980, 83, and 88, which were drought years, when the harvested acreage fell to 85 to 88%. So if you take another 5% of the acres off times the yield that they're forecasting, now all of a sudden you're talking about a corn crop closer to 10 billion bushels.
Wow, that's
and
going to cause...
that's a $9 number. It's not an $8 number, let me tell you.
You mean $9? You're talking about $9 a bushel per corn, so that would be another $1 a bushel from where we are now.
Right. So the GFS and the European models have some difference of agreement on the 6 to 10 day weather outlook, and of course August is the time when it's critical to get rain for the soybeans. Mm-hmm. So if we get some rain, we won't have complete disaster, but if we don't get rain, we'll have a complete disaster on the beans. The other key difference on corn this year versus 1988 is an example. In 1988, only about 55 million acres had crop insurance.
Oh, okay.
This year, we have some over 250 million acres of crop insurance, and of course, you know, if you're getting paid for it, let's call it a disaster and disc it under and go on.
Yeah, but that's still where the people that really need the corn are still in trouble.
But yeah, and the people that then translated the people that are in trouble are the poultry and the hog and the cattle people. That's why you saw 3 congressmen, 2 Republicans, and a Democrat the other day trying to get the renewable fuel standards waived. They were from Virginia, Arkansas, and North Carolina, which are poultry and pork states. So animal producers are getting their numbers down as fast as they can because the price of corn is so high. So it's going to affect poultry, eggs, pork, beef. You'll see relatively cheap prices right now, but a year from now, things are going to be expensive.
Of course. Someone asked a question, Rich, is what do you think that the government will ration corn?
No.
Okay, so there's enough to go around at a higher price.
Well, but the market will ration the corn. The price
that's
will
right. It gets
ration. The cure for low prices is low prices, and the cure for high prices is high prices. Yeah. At some price, China will stop buying. The cattle feeders in the Southwest will feed wheat instead of corn. Although we're having some weather issues in Russia, Ukraine, and Kazakhstan that could bring wheat back into the picture as a leader rather than a follower. Right now it's a follower, so when corn or beans sneezes, it drops like a rock. Yeah.
Someone mentioned, about during the war, between 1941 and 1944, when we were at war, the food stamps were rationed, but that was a totally different reasoning behind that. Most of the stuff was used for the troops, and that's why they had the food stamps, during that time.
Right.
I happen to be a little guy at that time, so I don't remember food stamps. I remember seeing them, but I don't remember them.
Yeah. It's killing the profitability of the poultry, egg, and pork and cattle producers. I mean, some of the cattle closing out right now are losing $200 a head.
Yeah. Hey, Rich, thanks for joining us, buddy. I'll have you on in another couple weeks, okay?
All right. Take care.
Yeah. Bye-bye. May God bless. We'll be right back, folks. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. Larry Pesavento for the Commodity Hour for TFNN. We've got a call from Jim in Florida. Are you there, Jim?
Hi, Larry. This is a commodities question, but it's personal because I had money with MF Global. They've distributed $2,100. They've acknowledged that they owe me $900, and they're reclassifying it from a commodities customer claim, or from a securities customer claim to a commodities customer claim. And they give me 30 days to respond. I didn't know. I know SIPC, and you've got your SIPC accounts, and I just didn't know whether your commodities accounts are covered by a similar government fund.
You know, I don't really know why they say that, because a commodity account, if you had it at MF Global and it was in commodities, it would be under the CFTC and it would not be under the SEC. But what you might want to do is, ask someone at, who are you trading through now?
Well, actually, through TD Ameritrade, through Thinkorswim.
You'll never get any answer at TD Ameritrade, but you might get one from Thinkorswim. You know what? Let me think about that and drop me an email. Just drop me an email at Larry at Trading Tutor, and I'll get that answer for you. What I'll probably do is ask Rich, because he knows a lot of the legal stuff.
It's kind of interesting. They're saying they're putting everything into 3 buckets: futures accounts, foreign futures accounts, and assets held in so-called delivery accounts. And they're not saying, depending on how much money they have in each account, they'll pay a pro rata share, and there's no guarantee that they'll pay you back. So that they're actually passing the buck from the CFTC to the bankruptcy trustee into three different buckets.
My assumption here is this. I was really surprised when I heard this yesterday coming from the Senate about MF Global, paying money back and getting 90 cents on the dollar. I thought we'd probably get about 25 cents on the dollar if we were lucky. It sounds like there's been some deals made somewhere because, J.P. Morgan is fessed up with well over half, of the $1.2, billion missing. J.P. Morgan said, "Oh yeah, here it is." And of course, they've been using the float since December. Right. Not that the float makes a lot anymore because interest rates are so low, but they're probably using it for margin and other things. So these are the things that that are there. So I will drop me an email, Jim, and I'll check that out for you. But we got a better chance of getting your money back now.
Okay, and before the end of the hour, can you just look at the bonds because we hit that 152? And I'll hang up.
Yep, I certainly will. That's one of the things I wanted to cover. We've got someone ask a question. We've had two people drop me emails about the full moon. Could this be a full moon low that's happening here on the the 2nd of August? And in the newsletter and also on Monday, I said this is it. I base everything that I look at first with the ratios, second with the patterns, and third with the timing. And the timing is included with the Bradley model and then the lunar cycle. And I was also watching the perigee of the moon, where the moon is closest to the Earth. This is where most of the earthquakes that we have are triggered, on the perigee of the moon. And so because we were coming into a Monday, I wanted to be able to, do that. Now, if you go back to look at July 4th on the solar eclipse, which was also a Monday, we were making a low at that time. So we were coming down into the full moon on one cycle, and we were going up to the full moon on the other cycle. But the answer to the question is, I really don't know. This could be, some type of a low, but frankly, I don't believe so because of the ratios and the Bradley model and all the other things and the way that it's come down here, folks. I mean, we were waiting for the market to turn, and it's done what it's supposed to do. It still looks like it wants to, go, a lot lower, in my opinion. We at least we're right for a few days, if nothing else. That's the way I look at it. And the bonds, of course, have, they've had a wild day today. They had a $2,000 move before Tickle Me Elmo started to talk over in Europe, and then after he started to talk, they realized he didn't have anything to say, and that's when everything just, literally melted down. And I'm not trying to be facetious. Well, I guess I am being facetious. I don't try to be, but I am at this particular time. But, there's not really much they can do. And I think our Federal Reserve is in the same situation that we are that's happening in Europe. We've just been borrowing money for too darn long, and this money is either going to be defaulted on, most probably, or paid back at X number of dollars. What concerns me more about what's going on in the world today is the fact that in the past 7 months, starting with MF Global, and well, there was a few before that too, but we've had MF Global, PFG Best, and now Knight Capital. I mean, this is scary, folks, and because if the system doesn't take the orders the way that it's supposed to, and people can't consummate the trades the way they're supposed to, we got big problems. And that's why we have to be really careful about where we keep our money and stuff like that. There would be a big positive influence for me if the MF Global people, do come up and, we do get, some money back from, and we should get, 100 cents on the dollar. In 1990, I was involved with a Stotler and Company bankruptcy on the Chicago Mercantile Exchange. It took me 10 years, but I did get 100 cents on the dollar. And I got, 50 cents on the dollar relatively soon, but then I had to wait for 10 years through, bankruptcy court and everything else to, to get the rest of the money back. So, and it wasn't a lot of money, but, this is different now because, we have such a higher volume of trading and everything. So this is what's scary, is the fact that we're having things like this. When I heard when I listened to what happened with Knight Capital, there's something wrong there, folks. Let me tell you, I'm involved with, automatic trading systems, and the one thing you have to have is the fat finger error problem. In other words, where someone just, that hits a button and it sticks and you just keep buying. I mean, there's got to be a place in either margin or by liquidity or something that you actually, it just literally shuts off if you do X number of trades more than the normal. That's the main thing. One of the reasons why Commodity Quote Graphics, CQG, has such great charts, they don't have any bad data, and they've been able to develop an algorithm that if prices move beyond a range, that they will not show that as a tick, and it basically cleans up the ticks. You don't have any bad ticks that you have to correct, and it makes it a whole lot better. Now, people, I have to get back to this question about the full moon because people are still asking me, the question. And the bottom line is, I don't know if this is a low. I just believe that the high that we had last week, this was the Bradley week we were been waiting for. I mean, even if you'd have sold it sometime this morning, it'd been a nice trade. And, we were saying that sometime around August 3rd, we were expecting a pretty big move. Now, I don't know if it's if it's going to last. I don't know if it's going to turn around. Hell, nobody else does either. So it's not a big deal. It's all about, risk management and, trying to, keep from, giving them too much back of, what you're trying to make. And that's the main thing. We early this morning I posted into the, Tiger TV, the chart of the Australian dollar because it had completed a perfect. We'll get to the U.S. dollar in just a minute, and then the last. I'm going to take the whole rest of the show to get back to the bond market because I think we're going to have a really good chance, to get into this bond market here and have a really good, possibility of making a, really nice, short side on the bonds here very, very soon because the news is pretty much out. They know that they can't do very much from where they are right now, and so we're going to be able to. Get an idea of where we want to enter these bonds. I don't know if they're going to make 160 like Tom says they are, and they certainly could because anytime a market can go down to 149 and change and then go to 152 in a matter of a couple hours, that's only 3 points. So the difference between 152 and 160 is only 8 points. So you see that doesn't take very long for them to get to get to that point. Now, someone asked a question about silver, and we've had several bottoms in silver. It's been acting very poorly compared to gold, but gold has just completed the number that we were looking at last week. I talked to you. Remember we were on the air at the commodity area. I said if the gold pulls back to that 1585 level, that should be a place where it should have support. So far, it's held that support. As long as gold holds above that 1585. In the nearby futures, which are the August futures, we should have a bull market to the upside. Like I mentioned at the beginning of the show, I really believe that looking at the gold stocks, just looking at the patterns, the XAU or Newmont are the two probably the better picks. Also, there's a GDX, I believe, that looks pretty good. For a gold mining stocks, I believe that's what someone mentioned to me this morning. So those are the ones that I'm looking at for, something long. Remember, these can be, counter trend trades. The stock market could go down and the gold mining stocks could go up. They've done that before also. So we want to, just know that that's what's happening. And, this is what we're trying to do is to get into these low risk type of trades to see if we don't, if we can get some of these right or not. Now, I want to start with the bonds here because we have we've had a huge move today. I mean, when I happened to be up quite a bit of the night last night, and when I saw what happened to bonds, when they dropped down to 149 and didn't go below the 1.618 of the last move, I said, I said, this looks like it's going to be, going to be a really wild day, and just not because it was the full moon or anything like that. It just looked like it wanted to be a wild day. And what we did is we went down, took out the lows from the last 2 days, and then we went up and took out the highs of yesterday. And that's what's happened. The 152 level was the area that I was looking to sell that level, and actually I did sell that level, and I basically got out of it with just a very, very small profit of one tick. And the reason why is because of the long-ranging bars. And the other reason is the stock market, just continued to go down, and I didn't want to have a hedge on, where bonds were going up and stocks were going down. I wanted to be able to profit off of it, so I just stayed in the short stock and, let the bonds go, and I'll see to look at them at a different time. But that's how I was handling it. It was just a money management thing, and the wide bar, the long-ranging bar into that 152 level gave me a little bit of trepidation. So the numbers were good. I just didn't feel very comfortable with it given everything else. And the dollar index looks like it's ready to possibly break out above that 184 level. But remember, there's a really big pattern getting ready to happen in the U.S. dollar index on a long-term basis. And I wanted to mention that to everyone. because I think it's important enough that we have to, really take a look at it. My problem is now as I'm trying to find it. I had it here right in front of me. Oh, I know what I did. I put it in my special file so that I wouldn't lose it, and I know that it's right here. And so I'm going to be able to bring it up really quick. This is a weekly chart, and if you don't believe in harmony and stuff in the markets, just take a look if you have a chance to go into Tiger TV and look at this long-term weekly dollar index going back to 2008. And as if you'll recall, remember in 2011, around that 73 to 75 level, Tom O'Brien was, he started his King Dollar campaign. And, since that time, we've had a, really strong 15% rally in the U.S. dollar when nobody thought it could rally. But what we have now is we're coming into a situation around this 85 level where we have 5 different price swings in other words, 5 different rallies that have occurred that were of similar nature, and that's coming in right at the 786 level. So that's telling us that even though the euro is going to probably break below that 120 level, it's probably going to hit our target of maybe the 118 at this first move. And if this is wrong, this thing could go shooting up and go way above 92. So this is the pattern that we're looking at right now in the long-term dollar index. It's had a little bit of, it's had more than just a little bit of resistance at this 84.40 level. So I wouldn't be wanting to buy the U.S. dollar right here. I'd rather buy it on a nice retracement. But frankly, we haven't had one of those in a while. So we're still waiting to see if that really is happening. But someone mentioned a question is that if it does get above 85, it could literally go parabolic, and that is no question about that. One of the things as a trader, that you worry about it. Well, you don't worry about it, but you think about it over the weekend is if you have an outlier event, like if Draghi comes in and says, I made a mistake. I don't think the euro should be in Greece or whatever. I mean, it could be anything. I'm just making stuff up because I don't understand the fundamentals. Thank God I don't understand the fundamentals, and I'd really be more confused than I am. But if something would change, well, I don't know what it could be. It could be anything. But if an outlier event occurred, a war would be an outlier event, or a major geophysical, catastrophe like an earthquake or a tidal wave, where you lose a couple 100,000 people, something crazy, but an outlier event that would change things. And this is where you get these, really dramatic moves. What we're having now, this is normal trading stuff. This is not even anything that is remotely concerned with, what we're looking at. With some of the other markets around the world. I mean, they're just very, very normal. They're not doing anything to tell you that you're any different. My game plan in the bonds is that I want to watch to see in the next day or so how they handle this area here between 153 and 154 again. I'm watching, what's happening with the rates around the world, because if you realize today that the market came down from 153 down to 149 and then it went right back up again, that's telling you that you're having more and more volatility and more liquidity in the market, and that's what you really need, especially when you're coming in, to a major top at these points, and that's why we're looking at. We're going to take a little break. I want to show you a little bit about the timing of the stock market, where we are now, in 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, and down the stretch we come for this week's series of shows. We got a call from Nick in Nashua, Massachusetts. Are you there, Nick?
Yes, thank you for taking my call, Larry.
What can I do for you?
You know, I'm more interested in hearing how you wrap up the show, so I'm not gonna give you a symbol to talk about. But I wanted to mention this because I've been watching, paying attention for years to you. When you have major turn dates, my wife has a hobby. She watches what's going on around the world as far as earthquakes and that kind of thing. Whenever she notices a quake that's over 6.0, she says, "Hey, there was a quake over here. It was 6.0 or greater." She tells me, and what I've noticed is, within 3 days of a major turn date, she's always telling me about a quake, usually before, sometimes after. But it's really this last time I actually told her, when you mentioned when the turn date was, I said to her, "Hey, there's going to be a 6.0 quake. Let me know when it happens and where it is." And she's like, "Oh yeah, you can predict quakes now." I'm like, "Yep." And there was one, Larry.
Well, the odds do favor those happening because it's a geophysical event. That's one of the reasons why I looked at Monday as a possible turn date, because we had perigee of the moon, which is 3 days before the full moon. The full moon is an optical event, whereas perigee is actually something that is they're all both calculable, but it is the closest point. And then as the Earth pulls away from the moon, that causes these plates to shift, I guess. But you're right. I mean, you go back and look at history, and a great preponderance of these happen within a couple of days of these huge lunar events and turn dates.
Yeah, amazing. Well, look, I'm going to get out of the way. I love your show, love your book, and I'm going to get out of the way so I can enjoy your wrap-up here.
Okay, and I'll send you the $20 as soon as I can, okay?
There you go.
Okay, thank you very much. All right. The way I want to end the show, folks, is that, I'm looking at 1340 today in the cash or the futures S&P. We're trading at 1352 now. If we get below 1340, we're now down more than 30 points from, where we thought the market was going to top on last Friday and again on Monday. If we get below 1340, that's pretty much going to tell us that we have a pretty good chance that the market is going to go down. Now, if it rallies back today and it's only down a little bit, this could be a bottom in the market, but I don't really believe that it is because of what I started the show with. It's based on ratios first. And remember, we had all those ratios coming in, 786 on the Dow, 786 on the S&P, 786 on the S&P cash, 61% on the NASDAQ that hit it 4 times in the last several weeks, and then of course the stepsister, the wicked stepsister, which is the Russell 2000. It was just looked like a disaster, and now it's becoming more and more. Facebook is now only about $7 away from the target that we thought that it would go to, and that's around $14, and we're trading at 20 right now. So we've got if the market goes down, it could pull it down. We don't know for sure, but we'll wait and see if it's going to be able to do this. Someone asked a question about natural gas, and we've had a big move in natural gas. It stopped exactly where it was supposed to be, and I'm probably not going to be able to finish the show with a chart for natural gas. Yes, I am. I've got it ready. I just didn't have it quite prepared, but we hit a beautiful ABCD correction very, very just a few days ago, and now what we're doing is we're making our first major correction here, and if we can get natural gas to come down to around 246, which is down about 50 cents per cubic feet from where it is right now, I think it would be a pretty good place to go long. But that's a long way away. It's not a spot where we want to be looking at it right now. We hit the exact 1.618 of the expansion move, but that's it. Everybody have a wonderful rest of the week, and may God bless.